One more oil major is gaining a foothold in U.S. shale. Total of France is making a $2.25 billion investment in Chesapeake's Barnett Shale holdings in Texas. Investors on both sides of the Atlantic are cheering this latest tie-up of natural gas shale plays. Shares of Total rose 1.2% in Paris. Chesapeake Energy shares rose 6% in New York. Our executive editor, Margaret Ryan, is here with the story. Margaret.
Susan, that's right. French oil giant Total is getting 25% of Chesapeake's Barnett Shale portfolio, and Chesapeake is getting $800 million in cash, plus Total is going to pay 60% of future drilling costs there, up to $1.45 billion. Now, Chesapeake Chairman Aubrey McClendon told analysts on a teleconference today the deal was a win for both companies, with Total getting risk-free entry to a proven U.S. gas field and Chesapeake able to lower its leverage and cash in part of its assets without losing income.
We have disclosed the sale of 25% of our Barnett upstream assets to Total, which includes about current production of 175 million cubic feet of gas equivalent per day, while at the same time we are also reaffirming our previous production forecast of 2.65 billion cubic feet of gas equivalent per day for 2010, despite this sale of 175 MMCFE per day to Total. The reason we can sell 175 million per day for 2.25 billion and not have to reduce our 2010 production forecast is a simple one. Our production levels continue to exceed what our budgets have been predicting, and so we are able to deliver this very attractive joint venture to our shareholders, yet not have to sacrifice any reported production growth to achieve it.
Now, this is Chesapeake's fourth joint venture in the shale play. Other partners include oil majors BP and Statoil, plus Plains Exploration and Production. And it comes just weeks after Exxon said it's buying Chesapeake competitor XTO Energy for $41 billion. That's Exxon's largest buy since Mobil. Now, McClendon said the deals mean the market is recognizing the value of shales, and Chesapeake has reached a point where it's able to reliably predict both well production and costs of applying the innovative drilling techniques that make retrieving the shale gas possible.
You know, I think for the first time in our careers, we can project at no more than flat or no higher than flat finding costs for years to come, and that probably goes out for at least a decade. We know how much gas we're going to find in each of these plays per well. That gas may even go up per well as we get better technologically, and so all we have to do is manage our costs and keep in mind that we own most of the rigs that we use, and so we save about $10,000 a day there per rig.
Now, McClendon also announced that Chesapeake has hedged 52% of its 2010 production at an average price of $8.10 per thousand cubic feet. That's ensuring the company makes a profit on that gas, since its gas production costs are running below $1.50 per thousand cubic feet. He said hedging alone has made Chesapeake $4 billion in the last decade.
Wow.
And I should add, Susan, that Chesapeake is a major supporter of the American Clean Skies Foundation. And of course, the foundation is the sponsor of Clean Skies News.
One of them, yes. Okay, thanks, Margaret. Now, this is all, of course, good news for Chesapeake. What exactly does Total get out of this deal?
Well, they get technology, mainly. It's the horizontal drilling, the fracking technology, all these technologies that have been developed in the last about 15 years in the U.S. But there are, of course, shales worldwide. Total already owns some of them in multiple countries. And making a deal like this for Total is a lot cheaper than repeating those years of development. Much of the technology involved is still proprietary.
Okay, so Chesapeake has had deals with BP for the Fayetteville Shale and with Statoil for the Marcellus Shale. Now, it's the technology that's drawing them. Are they also interested in U.S. gas, or is it simply technology to take back to their home countries?
Well, I think it's really both. The U.S. market is a lucrative market. It's seen as a growth market, particularly as climate legislation is passed more and more. The fastest way that a lot of utilities can cut their emissions emissions is in fact a switch from coal to gas. So it's seen as a growth market. But I think the technology is really the big thing there, particularly because, for the long term, it's to gas applications elsewhere. And, as McClendon's announcements today, when he was talking about the production costs, about actually getting production costs below $1.50 and even below $1 per 1,000 cubic feet. I remember a couple of years ago when these various companies, Chesapeake and others, were first talking about applying this technology, they were looking at costs more like $8, $9, $10 a cubic foot. So the technology has really been perfected in the last few years in economic terms. They brought the costs down, and so they have the technology ready to go. It's worth it to the majors to buy in. And there's market speculation after Exxon bought XTO, or said they would last week, that a lot of these smaller exploration and production companies may just be bought up, and in part it's going to be to get that technology.
So did McClendon indicate any more joint ventures might be coming?
Yes, he did. He said some were being actively pursued. The ones he gave the biggest hints on were, he said, one of them may come in the Eagle Ford play. It's a shale play in South Texas. He said drilling actually started today. So they'll be analyzing the cores, and in about 45 days, they'll know what they have on the leases they've been able to attain. He said Total has basically a right of first refusal to be a joint venture partner there. If they're not interested, they may go to someone else. And he said Statoil's watch Statoil's investor conference in February. They will be talking about potential joint ventures down in South Africa, in which Chesapeake would be involved. His basic message was kind of watch this space.
Wow. Okay, we will do it. Margaret Ryan, thank you.
Thanks.